Hello, this is Jordan. This video is being recorded on the afternoon of Monday, April 24th, 2023. Thank you so much for joining me today. In this video, I'm going to talk about why there is no triple top in gold. And I just have one chart, and we'll get into it looking at a historical chart of gold. And the first thing I have to say is, and I've done videos in the past talking about why there's no bull flag in silver, why silver is not in a cup and handle pattern. And there's always replies that say, well, it looks like a bull flag. It looks like a cup and handle. And I think even those replies come after the point that I make that these patterns have to fit certain parameters to be the pattern. Just because it looks like something doesn't mean it's that pattern. I mean, think about it like this. You could see someone that looks like an attractive woman, but it could be a dude. I mean, it doesn't happen all the time, but probably more often in today's world. But I mean, that is a thing. So I just want to give that example as to why just because it looks like a pattern doesn't mean it is that pattern and is going to play out as that pattern usually does. So looking at triple tops, triple tops, this is a distribution pattern. So most usually triple tops are a head and shoulders top. So if you look at the top left there, that's a sketch that I've done. So there's a couple things. It doesn't necessarily have to be a head and shoulders top, but you do tend to have three tops, and usually the right one, the third one, is always going to be lower than the other two. That's an important characteristic. And these distribution patterns, they occur after a big move up. Like it can be a multi-year, a big long move up. So you need that built in if you're going to get these negative reversals. The other important thing is there is a clear support neckline. And, looking at gold in 1981 and 2013, I mean, those were not triple tops, but you get the idea. Those were distribution patterns. I mean, they became distribution patterns. You see the two arrows there when they broke down from that first low. So typically, this is what you see in distribution patterns. There's always a neckline or a clear support line that gets tested multiple times, then it fails, then you get a big sell-off. I mean, if you just Google triple tops or triple top patterns and look at Google images, you'll see a neckline or a key support line in all of those images. So I think these factors can help you understand, what this pattern really looks like, especially when it's going to play out really negatively and really bearishly. And so looking at gold here and now, I mean, looking at the top right and that the situation that we have there, if you look at going back to last year, I did not think that, one reason why I didn't expect this huge 2013 repeat was there wasn't a clear neckline at 1675. The bigger line was that trend line. And you can see gold was holding above that trend line. Then you had the Russian invasion. It popped up. Then it fell back, lost the trend line. And it's back above that trend line now. But to me, that trend line was more important than the support at 1675 because that trend line was tested, multiple times. The line at 1675 was really only tested once after the peak in gold in 2020. But look, that being said, if this was a real triple top, just go down there to the right side in the middle of the chart. I've kind of sketched out if this was really a triple top in gold, you would have seen something like that play out where you wouldn't have had the false breakdown that we had last year. Instead, you would have had gold, bottom at 1675. It would have rallied up, but made a lower high. Maybe it would have only gone to 1800, 1850. Then it comes back down, breaks that 1675 support. That is, given how gold's been set up the last couple of years, that is how it would have had to have played out if this was a real triple top in a real major distribution pattern. Of course, that didn't happen. We had the false breakdown. And then the other thing, which nullifies this garbage about there being a triple top, is look at the rally. I mean, this third alleged top, gold's basically rallied back to the high. It was one daily close away from breaking out to a new all-time high. So again, in these distribution patterns, the third top or the second or the third, they're always lower than the first top or the second top. I mean, that is an important characteristic. And so in gold, it made a monthly all-time high by a little bit. It made a clear quarterly all-time high. Weekly, I think it couple closes, it had the second highest weekly close ever, the third highest weekly close ever. So this is, if this were a bearish consolidation for 2.5 years or 2.75 years, this is way too far into that to be seeing that kind of strength. So, for all these reasons, it's just, if you're telling me this is a triple top, I'm sorry, but that's really bad technical analysis. And I see this coming out from people who they have a bias, and so they're leaning into that bias. And when you have a bias, you're thinking, okay, what can I think of? I'm a bear. I'm bearish on gold. I want to say gold's going to break down or crash. Can I think of something that's bearish? Oh, a triple top. So they automatically default to that without doing the analysis that I've done here, or at least without really understanding what goes into these patterns. And, the action that we're seeing, not to say it's a perfect comparison, but it reminds me more of, well, not more, it reminds me far more than what happened there in 2009, where I've drawn that box. And so you can see, gold had a technical breakdown below 850, but, was down 30%. Then after that bottom, gold came racing back, had a huge rally up. In 4 months, it had like a 40% rally, rallied back up to 1,000. Then it consolidated for, 4 or 5 months before it made the huge breakout. And so I think, that's definitely, I'm going to say it's a high likelihood, but it's a strong possibility. Gold, this is a bullish cup and handle pattern. It's still building out the handle here, but, there's really strong support in the low to mid 1800s. I think you also have support at 1950 and 1900. So that's really the high probability moving forward. We're going to see some kind of really bullish consolidation here for a couple months. And gold's primed to make that huge breakout, the epic breakout that's coming. So this is absolutely not a triple top. I don't want to say anything more about that analysis other than that it's faulty and it's bad. And look, technology today, anybody can say anything they want. They can draw lines, throw it up on Twitter or the gold sites, and people will believe it. But that's the reality. This is not a triple top. You have to clear your bias and at least work on your technical analysis if that's what you believe. So there you go. That's all today for this video. I hope I've clarified that for everybody. Not a triple top. Gold, technically, it's in really good shape, folks. Don't let anybody else tell you otherwise, because that's the wrong prognosis right now. All right, let me know what you think in the comments. Thanks for tuning in and listening to that diatribe. I really appreciate it. Again, leave a comment. Subscribe to the channel. There's no ads on this channel. A lot of great content. Thank you so much for tuning in. Going to have a great interview coming up for you guys tomorrow. Looking forward to posting that in the next couple days. Thanks so much.